Alright guys, welcome to another episode of Investing Analysis. This is my fucking fourth time recording this because I can't record for shit. Without further ado, let's get into it. So starting off with the portfolio. Actually, you know what? Fuck the portfolio. Because we're taking a look at Bitcoin, and what do you know? I'm fucking right. Obviously, yesterday, I basically told everyone on camera that I do suspect this to be a very temporal bottom, as in like it's a it's not the ultimate bottom from a high time frame view, but from a short time frame view, it's most likely that the bottom. And what do you know? I was fucking right. I am currently up a quite decent amount on this position, up 5%, which obviously from a long-term investor's perspective is absolutely fucking nothing, but from a short-term day trader's perspective, it's fucking unreal. So yeah, we are currently up a decent amount on this position. Anyway, enough of being said with that. Let's actually look at the portfolio and all the data moving forward. So starting off with the portfolio, nothing's really changed. Haven't really changed this around. Now I do actually have a few bits of, I have one piece of fundamental analysis I actually want to talk about, which is some data to do with Hyperliquid. It actually turns out that Polymarket is going to be banned. Well, that's as much as I've gathered anyway. And to be honest with you, it was always fucking coming. It was always fucking coming. The amount of insider trading that was going on with Polymarket was ridiculous. But personally, you ask me, I think this ties in really well to my thesis that if we get these large prediction markets banned, the only route that people can then go down to will actually be the result of Hyperliquid opening up theirs, which basically equals a massive inflow for everyone to go into the crypto market, which is absolutely fucking amazing, and it's kind of what you want to see. So that's really it. In terms of price action, Hyperliquid still looks fine. I am a bit annoyed and long here with like in terms of a trade, but is what it is. Taking a look at the rest of them, yeah, they still look all fine. So yeah, anyway, let's move into the data. So starting off with my algo, we haven't seen any sort of sell signals or buy signals from it at all yet. Taking a look at more actual data. So this top one that you're seeing at the moment, this is my personal, I basically call it the stable coin to Bitcoin ratio change, which basically tells us how much capital is moving from Bitcoin into cash. So whenever it goes up, it's basically indicating that this market, it's basically indicating that the market will go down. And whenever it's going down, it's basically indicating of an uptrend. What's actually kind of funny is we did actually pop above this, but now we are slowly turning over again, entering into this uptrend once again. So that's very interesting to see. In terms of funding rates, my personal one still negative, which is lovely to see. Yeah, taking a look at the rest of the data. Not really data, but something I kind of missed was my low cap altcoins. So taking a look at Ray, it's kind of performing well. We are still within this uptrend, if you want to call it that, where we are still kind of going up slightly. We didn't break below this, which is lovely to see. So yeah. Anyway, taking a look at the rest of the analysis. In terms of funding rates on this, holy fucking shit, this has changed. I haven't seen this in a while. Looks like people are shorting the market once again. Love to see it. Fucking love to see it. Taking a look at this other funding rate on Velo, still negative, so that's obviously good to see. Matter of fact, I'll even update this. There we are. Yep, still positive, so love to see it. So I would probably suspect, with all this funding rate going on, that I would probably suspect the market to squeeze a lot higher, and I'm actually going to get into that why when we take a look at the liquidation maps. As you can actually see, these liquidations are actually building the fuck up above current price. So I actually do believe we will most likely squeeze higher, probably into where the CME gap is over here. Please ignore these signals on this. This is the CME future, so it's a completely different Bitcoin to the one that it's mainly designed for. But I would probably say the CME gap will probably be filled. We're probably gonna like keep touching this over the weekend, and then Sunday I would suspect doing something like this. And then we'll probably refill the CME gap and then see where price goes from there. So yeah, lovely to see. So that's currently what I'm viewing from these short-term liquidation maps. Obviously, when we take a look at the long-term liquidation maps, they also add into my thesis over here, where if we actually zoom in, you can actually see we do have this kind of cluster, but then we have this nice kind of bell curve of liquidations over here, which when you see these kind of bell curves, it basically indicates that once we get through these and we only have this, it's going to be a very sharp short squeeze to the upside, which again is lovely and what you want to see. But of course, I am still remaining bullish because, I mean, just look at the asymmetry on it. Like we've only got this tiny bit of downside, and then we've got all of this upside to get through. So still very, very bullish. Another piece of data I actually came across was this order book pressure. It's basically telling us basically where all these like sell and buy orders are within the market. So as we can see, we've actually got a lot of sell orders above current price, which obviously we'll have to get through and see where price is. But yeah, I just thought I want to bring this to all of your attention because it was actually kind of interesting to see. I'm not sure if I went over this in the last video, but this is basically a position heat map, which basically tells us who is basically buying what asset. And the main thing you've got to view it with this is basically everything in the middle. Whatever these guys are longing, you probably won't want to long. You want to ignore all the top and all the bottoms because these guys suck at trading and investing, and so do these guys. But all of these guys in the middle, they are the pros, and they are the ones that you probably want to take a look at. So yeah, I just thought I'd bring that to your attention. Taking a look at CryptoQuant, we are still on the right side of the trade, where smart money is accumulating and dumb money is distributing. Love to see it. And then taking a look at net realized profit and loss, people are still in a loss. Now, obviously, this does have a one-day lag. So I would assume some people would be in a profit today, but we'll have to see at market close. Anyway, taking a look at check on chain data. We actually have, when it comes to the choppiness index, we are still pretty elevated. I would assume this would start trending down very, very soon once this trend really begins to start. The liquidation dominance is coming down again, basically telling us that we've probably got a lot of liquidation cascades to really go, which would basically send price fucking soaring up very, very soon as fuel from all the shorts being absolutely fucked over. Bitcoin futures open interest has been in a deleveraging sell-off. This does have I think this does have a one-day lag, but I could be wrong. But yeah, we're still in this deleveraging sell-off, which is fine to see, basically telling us that a bottom has probably occurred. Funding rate, again, still very, very negative. Matter of fact, I wonder if we will see them increase as I refresh this. Nope, no increase there. MVRV, short-term thing. We are coming very, very close to this band. Again, once we come above this red line, we will be within a long-term trend to the upside. So can't wait for that. Now, all that being said, let's actually take a look at the crypto news and what's happening across the rest of the world. US debt surpasses the entire United States GDP for the first time ever since World War II. This is just proof, again, that we are in a debt society, and this is just the way how things are going to be. Okay, whatever, we don't really care about that. just in. Apple rises 5%. Okay, cool. Along, it's kind of useless, I'll be honest with you. Yeah, okay, cool. Oh, nice. We have that. Yeah, there's nothing really here from Watcher Guru to really take note of. This is kind of cool. I did actually come across this of basically, this is known as Fire Chart. So it's a data set that I don't have access to, but they do post a lot of free shit on their Twitter. And basically the way you've got to view it is all these lines basically represent the amount of capital flowing into the market. So the brown ones are basically 1 million to 10 million worth of positions. Now, obviously, this is currently down a bit, which is very interesting to see, whilst the rest of them are up. I think this is indicative of basically we are within a short squeeze rally, which it's not a bad thing. I'm going to say this, like everyone on Twitter at the moment are saying, oh, but this is a leverage-driven rally. This leverage-driven rallies never end well. But I've got some fucking news for you. This was a leverage-driven rally, and look where that got us, right? Fucking this was a leverage. All of this was a leverage-driven rally. All of this was a leverage-driven rally. This one, not so much, because that's when the ETFs really began to take off. The beginning of this was a leverage-driven rally. Like, in terms of trends, when they start and when they end, right? So let's say we view this from a cycle perspective, right? You have to understand, the very beginning of it here will always be driven by leverage, and it will always begin to crash when the leverage gets really high up, right? But it's usually across like this part here. That's when it's all spot driven. So like when we do see leverage driven rallies, it's not a bad thing, but you want to make sure that the rest of it is driven by spot. So yeah, this is still driven by leverage, but I would say I really want to see price surpass probably 90,000. If we get like above here, I would probably want to see, you know, that spot volume really beginning to pick up. But for now, it's fine to see it all just being driven by leverage. So yeah, this guy is really beginning to piss me off. He's basically a liquidity engineer who has been trying to short the market for ages. He's just a fucking nobody, and yeah, I assume he's being liquidated, which fucking good. Same guy again, saying he's not going to turn bullish. This is a trap. Bros about body get liquidated so hard. What else do we have? This tweet kind of made me laugh. It's like the same fucking thing that happens over and over again, right? And it's just the cycle nature, right? Where we go from it's so over, we're so back, it's so over, we're so back. Like, you have to realize the majority of the market is actually very emotionally driven. So you're going to see a bunch of people begin to start getting bullish now. Now, it's not a top signal, but it's just funny to see because everyone is just so emotional when it comes to the markets. This is another kind of decent post from Material Indicators. They basically have a bunch of different indicators, and this is kind of similar to our one that we have, but I believe my one is a bit more robust compared to his. His is a trend progression. So it basically tells you when uptrends and downtrends are going to begin and when you should be basically buying for an uptrend. It's basically signaling on I believe this is weekly? Oh, monthly. So it's basically indicating that on a monthly that this is a probably uptrend that you want to kind of pay attention to, but not so much. It's kind of the same one. I kind of think it's the same one to kind of this, where like, yeah, sure, it went up, and like, yeah, fine, it was a good place to buy, but again, you still had to suffer through how many, that was 1, 2, 3, 4, 5, 6, 7. You had to suffer through 8 months of down until you were even just at break even again. So yeah, but anyway, it's basically indicating that we will probably see an uptrend begin, but it might not be like an ultimate uptrend like you saw here, or like with this here. This guy is fucking hilarious. I can't really show you it because I'll get copyrighted, but this guy is so fucking funny. If you know, you know. This was very interesting. Where Trump is basically just wanting Kevin Walsh to literally just cut interest rates the moment he steps in, which I find is really funny because you've got to think about it, right? Trump goes ahead, starts war. War sends price down. Buys assets, cuts interest rates, price does this. Ultimate Trump move. Of course, that's just a thesis, and I don't mean anything by it. And finally, this is a kind of interesting one, which basically, I believe this just goes over of how much just sitting on your ass pays off, right? Like, if you can literally just suffer through the 50, 60, 80% declines in markets, this is the kind of profit that you can make. Like Ethereum, you bought $1,000 worth of Ethereum 10 years ago, 2.7 million. Now, I don't know if this number is true, but I do know that you would have made a lot by just simply sitting on your ass, doing nothing, and just buy, holds, and forget. So yeah, that's basically all that we have for today. Hope you all enjoyed this video, and I will see you all very, very soon. In a bit, guys.